Welcome to the Innovia Consulting webinar series on demand. Scan the QR code or visit innovia.com/resources to check out the latest Business Central news and training for your business. This session is powered by UST Education. UST Education provides over 200 webinars a year for associations and B2B clients. The webinars are always led by thought leaders and offer CE credits.
Today, we're going to talk about a very exciting topic, use tax. I know everyone loves government fees, so use tax, I know you're going to be very excited for. And so in case you don't know me, I'm Andrea Rivietto. I am a CPA. I am a former controller, so I do have firsthand experience for this. I work with Innovia Consulting as an application consultant that specializes in finance and accounting. And I'm also the Denver chapter leader for the user group. If you guys should definitely check out your local user groups. If you are not currently involved in them, I recommend that you go because it's free knowledge and it's really a pretty fun time. I'm also an all-star winner. And I'm also a winner in my local gym in my age category for deadlift, squat, and bench. Just second place. But, you know, I'm getting there, guys. I'm getting there. So that's my big proud moment. All right.
Just second place, Andrea. Just second.
Second place.
That's amazing.
To be fair to myself, the other gal weighs 100 pounds more than me.
Well, for deadlifting, that matters, right?
Yeah, so she should be able to outlift me. But yes, I'll take second place. I compete in December, so hopefully I'll be first place in a competition.
There you go.
All right. So what is use tax? So before we talk about how to set it up, let's talk about when you might need it or might not need it, right? So just in case you missed the sales tax versus use tax, sales tax is tax that is only imposed upon somebody like a customer. So if you're buying something, you might have sales tax imposed on you. Or if you're selling a product, you might impose sales tax on a person. Use tax is a little bit different. It is tax that you impose upon yourself if you didn't have sales tax imposed upon you. So, but before you get too excited, we'll talk about what conditions those normally mean. But it's you basically assessing that you owe tax. Now, there was a big thing back in the day when Amazon didn't tax people, that they would try to get you to record your own use tax and remit tax to the government on your returns, because the state of Colorado is missing out on all this tax because you were shipping in from Amazon. Now that's kind of gone away, but businesses still typically have use tax situations. And now I threw in consumption tax just to really blow your guys' mind. If you take a product off of your floor and let's say you explode it, right? You're testing it out and now you're never actually going to resell it and get tax on the sell. Technically, you're supposed to pay something called consumption tax, right? Because now guess who the end user of your product is? You are. So that's consumption tax. Now I'm going to say levels of hierarchy of understanding tax. Most people are starting to get pretty familiar with sales tax, or at least they've been through enough audits or been audited on sales tax. That's pretty familiar. Use tax, starting to get a little bit deeper, and not everybody's doing use tax, but you'll find out in a second why you might not know much about it. And then consumption tax, almost you must have been audited if you were doing consumption tax, or really just great on tax. So don't be ashamed if you're not doing consumption or seller's use tax at this point. All right, so here's what I always try to say without saying it before the slide, is that not all states, jurisdictions, counties, parish, or cities even require use tax. So like sales tax, this is not federally regulated. It is state and local and city regulated. And in fact, it's so messy that in some cities in Colorado, use tax is not I live in Colorado, so I'm going to say Colorado a lot. So where you live, just apply it there. But there are certain cities in Colorado that don't require use tax at all. Like, you do not have to record it, which means you don't even have to record it to the state. But then there's others that record it, like require it, and they require it in lots of instances. And then you also have to pay the state and the county for it. And then what's kind of fun is sometimes your city might have a varying law that actually contradicts the county's law. And now you have like kind of a messy situation, because oftentimes when you report tax, you report it all in one. And now you have this kind of problem where you don't owe tax to this county for it, but you owe tax to the city. So use tax is messy. I've actually testified before like the Colorado Congress about trying to streamline it, at least slightly better. Because if the government wants you to be their tax service for them, they should probably have it fairly consistent and not so willy-nilly do what you want to do. And this also makes it hard then for people who are trying to determine if they're doing it right. Are they even doing it right? Because the chances are they might be doing it wrong, just because it's very hard to figure out if you're supposed to be doing it, how to do it right. So that's fine. So second CPE question, do you know if you owe use tax? No. I had no idea. I'm not going to be able to tell you if you do owe it or not, but we'll go through it. If not, at least you get some CPE from this. All right. So things that are not subject to use tax, generally speaking, anything that goes into your final product is tax exempt when you buy it. And so you would not expect to get sales tax from your vendor, or from your vendors. You wouldn't expect them to charge you sales tax. And then you also are not going to be remitting use tax, but it's pretty specific. So you make chocolate bars, and if you buy the cocoa beans, you're not going to be taxed on those cocoa beans. However, things that you need to purchase, typically like gloves, tubing, work boots, those are still taxable, even though they go into your finished, well, they don't go directly into your finished goods. So that's why I was kind of talking about that consumption tax. If you take a chocolate bar out to test it and you eat it and you didn't pay tax on the cocoa bean, now technically when you eat the chocolate bar, you are the end user, and therefore you should be paying tax. But the system doesn't really help you with consumption tax. So I won't belittle that point too much. All right. So if the vendor already applied sales tax, you're not going to do anything else, though I will show you best practices in the system of how I would record it. So if you ever got use tax audited, it's really easy to pull up, because the traditional method right now is that you just go through a sampling of invoices, and then they kind of apply a flat rate that says, okay, well, you didn't like accrue this much use tax in this period, so that must be true in all periods, which can really burn you, to be honest with you, because it could be you had one very large expenditure that you normally don't have that had tax on it, that didn't have tax it should have. But don't double down your taxes. If somebody already made you pay sales tax, don't pay use tax. All right. So things that are normally examples of use tax, right? I don't really want to read off this whole thing to you, but really anything that's used to produce your products, right? So that tubing, the goggles, the gloves, anything that is consumed by the company or the employee, which can include food, right? Online purchases that are not taxed, manufacturing equipment. So I will say, be careful with manufacturing equipment. So it's kind of funny. We had in the city of Denver, when you buy fixed assets that are used for your finished goods, so let's think like a capsuling machine or something like that, If you then move them, like those are tax exempt, but then when you moved it to the city of Boulder, like we did, they made us pay taxes on it. And it was like a really hefty fine. So that really sucked because nobody was prepared for that. And sometimes farm equipment is exempt and sometimes farm equipment is not exempt. So it's kind of fun. If you move things from one city to another, so let's just say I purchased it in Denver, which used to have a lower tax rate than Boulder, but now it's a little different. But I didn't put it into service until I moved to Boulder. So let's say I bought a laptop in the city of Denver because it's right next to Boulder, and then I'm actually going to use it in Boulder. Technically, those are different taxable rates, right? So you're supposed to actually pay the difference in the tax. Same thing with like interstate transfers of those things. You can technically do lower tax rates, but I'm going to tell you anytime that you are trying to take credit, especially big credits, you're pretty much just inviting the taxing authority to come to your door. Anything that's a supply item, right, that's typically taxed. Sort of consumption, I feel like I talked about that one already. TTP, so any tangible personal property, really think like your laptops, anything that you're using in your office, chairs, things like that. I don't know what any, oh yeah, other purchases made by the company. So if I walk over to Home Depot and I buy something that I'm going to use in the manufacturing, that should be in tax at the rate where I'm actually going to consume it. And yeah, I feel like that's repetitive on this slide. Or I just talked what I already should have said. Office equipment, office supplies. Most of those are going to be taxed. All right. So use tax rates. These are normally going to be the same as the sales tax rate for that area. There are times when that is not true because it's the government, but for the most part, it is the same. So if you even were to like look up use tax, you might result in nothing and think you owe no use tax just because you couldn't find a rate, but it probably just means it's the same as your sales tax. Can legislation change items like cocoa beans become taxable? Probably they could. I would assume though they are going to meet a lot of resistance because like if you get charged on cocoa beans and you make the chocolate bars and you're paying tax on cocoa beans, where are you going to put that tax? Like you're not going to eat that, right? As a company, you are not going to eat that tax. You're going to pass it on. And then that means the consumer is eventually going to pay the tax on your cocoa beans and then also the tax on your candy bars, right? So it gets built into the cost and it increases the price of that finished good. So I think there'd be a lot of pushback. I would say use tax is one of those things that it's like a silent tax, right? So like what do people get all up in arms about? Property tax, right? Your property tax goes up, you get pissy about it, right? You fight it. They have to like make laws on like ballots and you get to say yes or no, and they can't waiver a new property tax on you without you voting on it. And income tax, once again, it's also one of those things that you know what that is and what they're levying on you, and I believe that is a ballot issue as well. Sales tax and use tax, I got bad news. You don't get a vote on those. And then use tax is definitely the one that is like even less visible because what the consumer is not seeing is that you are literally passing on any use tax as a business to the consumer. So the consumer is actually being charged tax twice, once for all the taxes you had to pay as a corporation and then on the tax on that good itself. So I'm surprised there's not more arguments for use tax or regulations about use or sales tax, just because it really does impact the final consumer. But if I was to think that all of a sudden they made sweeping policies where raw material that you purchase to make finished goods is now taxable, you're probably going to have a lot of up in arms on that, because what that most likely would mean is if you sell to a reseller, you have to charge them sales tax. There would be no more exemptions. And I think that would be a pretty big deal. So hopefully that never happens, but could they? Absolutely. And then that, once again, you need to confirm what is and isn't taxable in your local guidelines. Do you even need to do use tax, right? On which types of things are you going to be doing sales tax? Because as I said, like machines in two different cities that are neighboring cities were different, right? One was taxed and one was not taxed. So you just make sure that you really understand your local guidelines, because I'm not going to be able to answer that for you because I don't know everybody's local guidelines. I could probably barely recite to you guidelines of cities that I've actually done use tax in, because it changes and they're messy, and sometimes you even call the city and you can ask them and they don't even know. So that's why I hate use tax, because it is definitely very, very ambiguous. All right, another CPE question. Has anyone ever been through a use tax audit? They're terrible. If you think sales tax audits are bad, wait until you get a use tax audit. It's far worse. Something to let you look forward to. All right, let's get into setting up. The good news is similar to sales tax in BC or NAV. It is, I would never use an outside service for use tax. So I believe a service like Avalar could do use tax. However, I found that to be more trouble than it is actually worth. So unless once again you are taxable in like 50 places, you're much better off just setting up sales tax or the use tax inside of BC. And the questions we normally we're going to ask ourselves is, who are you collecting tax for? Like, who are tax jurisdictions or tax areas? And what are the tax rates, right? So what rate do we need to tax ourselves on? And then what vendors are typically liable for tax? Because not all vendors are, right? Those raw material ones, the things that you're using in your product, they're not going to be tax liable. Or you might have vendors who already assessed you sales tax, so you're not going to worry about those vendors. You really are only worried about the population of vendors who are not taxing you and they should be taxing you. All right. And they're probably not taxing you because they're not Nexus, by the way. They're not just being rude. They're probably not Nexus, so they have no like authority to collect taxes and remit them. So that's most realistically like why you would have to impose your own use tax, right? So the first thing we're going to do is set up a tax jurisdiction. And the other day I got like way ahead of myself on this, so let's see if I can control myself. All right, so this is where are you doing tax at? If you already have sales tax in here, you can pretty much skip this step because you've already done it, right? So I'm just going to enter Colorado in here. It's going to try to fill out the accounts for me. Some people do different tax accounts for sales versus purchases. This is a Kronos environment, so I don't really have a varying account. Is it a big deal if they're going to the same account? No. It might be something that you want. Right, so I'll do state of Colorado, and then I'm just going to enter in Denver County. All right, so same thing, and I'm having Denver. It's going to report into the same jurisdiction of Colorado. There, you can make arguments to do this separately. Once we get to that reporting, you might see that it might be easier for you to do it separately. So, or combined. The combined rate is generally speaking when I submit a sales tax return where I'm also putting the use tax on for Colorado, it's kind of a one rate type of system, right? It's not like I don't report sales for this or sales for that. Arizona is a funky one where that might not be the case. It's by jurisdiction that you kind of file. So it might look a little different, but we'll just say for it right now, we're just going to have Denver and Colorado. All right, so get back into my slides. All right, so that was that tax account where we're going to put our liability, and then the report to jurisdiction specifies, hey, what type of reporting are we going to get from it? All right, the next is going to be our tax area. And what you can kind of see from this screen, it's bringing those jurisdictions together. And this is what we actually assign to, well, it says customer because this could be used for sales tax as well. But what you're actually assigning to vendor cards, what you're actually going to assign to the orders, the purchase orders, purchase invoices. Now, did I go into the same screen? I did. I'm about to go into tax area. Now, one thing we used to do is we had a variance account because we did bill in 2 cities. We had Denver and we did have Boulder. So we made like a variance account. Now, reporting the variances is extremely hard. So because there's nothing that's like, oh, a variance, you're only trying to pay $25, not $75, right? So that did make things a little interesting. But luckily with use tax, it's normally just applicable in the city that you are in, like where you are physically located, where the goods are physically going into service. Why sales tax gets complicated because it's tax that's distributing outward, right? And it's by their last 4 digits, it's their rules, it's not your rules. So in this case, it is your rules, so it's a little bit easier. So we're just going to bring in Colorado and Denver. Technically speaking, if you know much about Denver tax, there is also a specialty tax. I am just going to roll specialty into Denver. But all of the state of Colorado is on a 1.1% specialty tax. That's in addition to Colorado. It's like RTD and science and stuff like that. And you'll see, I forgot to name this. Oh, maybe it didn't. I just probably didn't tab, so it didn't save it. So that's all tax area is doing. It's just bringing us together. It says these 2 things go together. So if I was to look at one of theirs, they have Florida, State County, and City Miami. I did ignore Denver County being separated. So you can get very granular, or you can do kind of high level like I just did right there. Especially since this is use tax, I'm not as worried about the jurisdictions. As long as the total rate is correct at the end of the day, then you'll be fine. All right, let me try to, where's my parabolica? Not there. Where is it? All right, tax area. All right, so this is just that grouping, as I said. You would list all jurisdictions that fall within that tax area. So if I also had Boulder, Colorado, I'm going to add a Boulder in addition to the Denver. And then I'd have a tax area code that's Boulder that has the Boulder city and maybe Boulder County, as well as the state of Colorado. So it's how granular I got on that setup. And then there is something called calculation order. I don't know if you saw that, which is programming sequences of how the tax is calculated. However, for the most part, they're pretty flat rate. Like it's 8.81% in the city of Denver. It's not like, oh, well, 4.9 is on this, and then the 1.1 is based off of like the rate plus the 4.9, right? It's just one rate. So calculation order, I haven't seen too many times where that is a thing. Most places are just flat rates. All right, tax detail. So this, the other day, I got like messed up doing this. Tax detail is where you actually put the rates, right? So I normally recommend that you would have a tax group code called supplies. So they already have it. I don't know why there's this tax Olympic supplies. The Olympic throws me up every single time. I'm like, what does that mean? I don't know what it means either, guys. But generally speaking, I would do Colorado supplies, And this is my use tax one. Now, if you're doing sales and use tax in the system and the rates are the same, you could do either, but oftentimes you're not going to use the tax group code of supplies when it comes to your sales tax. You are only going to do use tax. What effective date? Most rates stay pretty consistent on an annual basis, but they do change annually. So it's one of those things like January 1st, you want to see if there's any new laws. I don't think they normally change 1/1. It's normally kind of a mid-year change where they're like, okay, rates are going up in 2024, but it doesn't go into effect until like 3/1. This column is weirdly named tax below maximum. I don't know who named this column, but this is just your tax rate, right? So what is the rate? So Denver is 4, or Colorado is 4.9. And then if I was to grab a Denver in here and then also use the coding supplies, use tax only, 1/1/2023 tax rate, what is it? As I said, I'm lumping my city and my specialty all in the county all together because it doesn't matter if this is use tax. This is just for my internal records. So it's 3.91 as a total. So these two together, my tax jurisdiction would equal, or my tax area would equal 8.81%. So we're using supplies. Generally speaking, these are item cards. I never recommend that you set up things that you consume in your business, like gloves, laptops, anything like that, as item cards. So chances are when you're purchasing these, you are purchasing these on GL accounts, sometimes resources. You can do items that are like non-inventory items, right? So there are options to do a non-inventory item. But generally speaking, these get messy. I would not put inventory like with these because normally if it's inventory, it's most likely tax exempt, right? But this is that tax group code. If you were to do it on an item card, you could assign it to supplies, given that this is most likely something that you're paying use tax on, something that you are consuming. But once again, bad idea. I would not do that. I would not purposely. Why does this keep going off from me? Okay. All right, so that's that tax detail setup. We can just see it with the example. That is Seattle, right? Where he has his like tax, no tax. He's not using supplies in this one. All right. Taxable and in what jurisdiction? So you can go into the vendor cards, as I said, and then mark them if they are tax liable and the tax area code. So if I was, I wonder if I'm canceling out of this bad. All right, so if I go into my vendor card, and I can say that this is tax liable, so this is set true, and it's Atlanta, Georgia. I'm going to just change it to Denver. Now there would be a mismatch, right? This is like an Atlanta address, and now I'm saying it's Denver. That's okay, especially on a vendor, because the tax rate, once again, is your tax rate. As you're assessing this, this is not sales tax that you're assessing upon the vendor. So to say tax liable true and Denver is good. So that's all you really need to do. Most of these other things like tax registration numbers, not important, right? And a lot of the other things like these are deal with 1099s, not related to your use tax whatsoever. All right, you can also set it up on the location card. It's about the same thing, right? Where you can exclude stuff from tax calculation on the location, or you can add those tax area codes to the location setup. The exclude from tax calculation is mostly on sales tax. Like if you're using Avalara, you could put like exclude from tax calculation for a location card. And once again, you're not really putting inventory as use tax items. So I normally, when I've done it on the location card, I'm just probably going to do it on vendors and at maximum on a purchase invoice level. And then there's only one other setup thing where you have to go into your purchases and payables setup and say use vendor tax area code settings, right? So you can see it down here. And that is a requirement to get it going. So let's see if it's already set up in here so we can do our demo. Use vendor tax area. There we go. Now back to, yeah, I didn't kill it this time. I think I've been killing it in the past. All right, so tax group setups, but that's what we kind of already talked about. I'm going to use supplies. This is a GL account that you're looking at here. You can pop it onto a GL account with a tax group code pulls in from the GL account. So if you're like, oh, every time somebody does office supply, bring in the tax group code of supplies, you could do that as well. But tax group code, I normally try to recommend the use tax ones be pretty specific, that you know it's use tax. The word supplies is a good way to know that's probably use tax. All right. We don't need to do another demo because we've already done it. I did it while we were talking instead of just showing you PowerPoints. But what we've covered is set up those tax jurisdictions. Once again, that's who and what GL account, the tax area code, the tax area, combining those tax jurisdictions, that purchase and payable setup, tax group code, which in our case is going to be the word supplies, and finally the tax detail setup, that tax rate for your use tax for the word supplies. The area mixed with the tax group code. All right. So we're going to do a purchase invoice that requires tax. And I'm going to also walk you through what I normally recommend if you've been assessed sales tax, right? And then we can look at the vendor ledger entries. And I know it's confusing. It's called sales tax collected report. It's just the report name. It's still sales tax collected, even though it is use tax. Okay, so now I can use this vendor. So we are going to go into a purchase invoice. Can you do this in a purchase order? Absolutely. But once again, purchase orders are normally inventory. So you most likely are not doing tax on it. But once again, there are those times that you are purchase ordering a large thing of like gloves, and maybe you weren't charged tax for some reason. You would want to do that. So I'm going to fix the dates because this is Kronos and Kronos is set to 2021. And I'm just going to do S123 so I can fill this out correctly. We are starting off with a GL account. This is, since it's Kronos, my accounts are pretty limited, but I think 61,400 is office supplies, which is a good example. And now, if you're not doing this, just a hot tip, AP best practices, change your description and comments to something that's helpful, like Andrea's laptop, right? It's always helpful. One, and then let's say it was $500. Now, in this case, this is tax area code Denver. You'll see tax group code is non-taxable. This is not going to levy a taxing situation for me. So I'm going to change this to supplies. And then I feel like I'm missing another box on my page. So let me personalize this because there should be one more box down here, which is use tax. That is an important box. And then we're going to do tax liable too. So tax liable must be true, but use tax must also be true, right? And now, if drum roll, if I've set this up correctly, hopefully it applied the tax that I was expecting. It did not. What did I do wrong? I think it's the address it does not like. Oh no, what did I do? I love live demos because then you're like, oh no, I messed something up. What have I done? So it should be Denver. Let's see. I put in my rates. That is all good there. Maybe it doesn't like my purchase and pay. Maybe it is trying to combine my addresses. I'm just curious. Please reopen. Sometimes though, Oh, this is a great demo. It is not putting in tax, because what it should have done is put in my tax rate there. So I'm wondering if I missed a step or it just doesn't like the address that I use, which is probably true. Because it's trying to ship to there. So let's try a new address to see if that fixes me. Sorry, just a second. I was like, I don't have a lot of time. So I'm like, oh, that was unexpected. That did not work out for me. I was like, what did I do? All right. I'm just trying to find a quick address. Custom address. All right. That should not be it. I don't know why this is not. Well, that's not the best demo I've ever done. I don't understand why this is not picking up my text for me. Well, now it's reset to Atlanta. I'm just trying to play with it, see why. Now it has negative text. All right, all right. Did I do? All right, now that should be good. All right, well, I failed my demo for you guys. I don't understand why it's doing it, but I don't have time to investigate it right now. Technically speaking, all those steps should have worked. It was probably just on the fly or something weird about my Kronos environment. But I did want to show you guys one other thing that I definitely recommend. Did I pop in the rate? Maybe I popped in the rate negative. That might. All right. So generally speaking, if you've been assessed sales tax, I would make a different line. So sales tax Andrea's laptop and $50. And the reason I would do that, so you wouldn't have all these things turned on. You would not assess use tax if they've already assessed sales tax. The GL account is the same, right? It's not a different account, but you definitely want to put it on a secondary line, because otherwise what's going to happen is if you are trying to find invoices that have sales tax on it to show that, yes, you did not owe it, this is pretty easy to pull out. And then you can, like, if you keep it consistent with words like sales tax or just tax, then you know which ones already had assessed tax when you look in your general ledger entries. But I'm very confused on my little use tax. All right. And then I can't show you the vendor ledger entries. Trying to figure out why I popped that in wrong. So just to show you guys how these work, there's a bunch of different flags, right? So if it's tax liable flag is true, use tax is yes as well. What it should do is inventory or GL becomes 109. 109, direct cost apply is 109, but the tax account for purchases becomes 9, and the accounts payable is 100, because you're not going to remit 109 back to the vendor. You owe them 100, and the tax is 9. There's other things that you can do to kind of record the taxes in the system. However, I have found that gets sticky, like as you just saw, I couldn't even get it to tax right. It was going the opposite direction, which was kind of funny. I was like, it was a credit for tax. I don't know why I ended up with that. But that you can do different things with different flags, right? So if you have none of the flags on, what it's going to do is $100, and it's going to tax you 100, right? Why, if you have a tax liable flag as true, but the use tax as false, it's going to assume the tax has been added on. So the accounts payable is actually 109. But that's what I was saying. I like to do the double line. I find that to be easier than this, because this gets confusing when you pull that secondary report, which is the sales tax collected report, which unfortunately is probably going to read very blank because I could not get this. I'm just going to change this to Atlanta, see if I just did something silly. And now it doesn't like me. Okay, now it has a proper tax, $25 for that. I don't understand what I must have done something wonky with my rate. But now you can see, oh, come on, release. It was there. It was just there. Am I losing my mind? The $25 was just on. Come back. What is it doing to me? None of this makes sense because they shouldn't be doing the 25. So I'm just going to post it because that is not what I'm trying to show you right now. I just wanted to show you the entries. All right. So if I was to go into this vendor card, and I looked at their vendor ledger entries, the invoice is only going to be for the amount. Oh no, this actually applied it like it was the other way. Oh my gosh. I'm having a bad demo day. This actually did it where it's the tax liable, so it did it this way. I don't know what happened to my little demo. I must have done the rates weird. But since I'm running out of time, I'm going to jump on to the next slide. So this is the kind of flow chart I typically use for my AP people. For some reason, I put the word AR up there, and then I threw away the base of this. So that was fun. So the AP receives an invoice and reviews it. And the first question to kind of ask yourself is, this is not a use taxable item with sales tax applied. And if the action is no, like, so you don't owe use tax and there's no sales tax applied, there's no further action needed, right? If they did apply sales tax and you are not supposed to pay sales tax, try to push back on them to remove it. You most likely are going to have to provide an exemption certificate that says, hey, we're using this manufacturing, we're a farm, we're a school, whatever the reason is, or we're buying this for resale. It's mostly resale, that you're going to provide that exemption certificate for them so they could remove that tax. You can get the tax off of it, so you can get like a credit and you can pop that in. But I will say credits get kind of messy when you're asking for it back. You can also ask for it from the state differently, where you actually like tell the state they owe you money because you paid sales tax when you wouldn't have. But the best way is to get them to take it off. Now, if you are not tax exempt in that, like you do not have a resale tax license, unfortunately, even if the item is not supposed to be taxed, you're still going to have to pay sales tax. If their nexus there, you are not, and you do not have a resale, or it's not part of SUTA. The other option is this is a use taxable item. The sales tax, like how was the sales tax applied? If they've already popped it in for you, right, where they have applied sales tax, you don't have to do anything else because it is correct. Otherwise, you are going to go through the system and do the tax liable flags and get the tax on it, which unfortunately I did something off and it's not working for me right now. But due to time constraints, I don't have time to talk about that. I don't have time to fix my own mistakes. So, but you would go through the process, and then at that month end, you would pull that sales tax collector report and remit the tax to the appropriate jurisdiction. If you are using an outside software like Avalara, you would just add a purchase line in Avalara so it would go out into your filing reports. All right, CPE question. When do you remit use tax to the government? Probably lost everyone with the fact my demo failed, which makes me very sad. You remit it when you remit your sales tax to the state. I think I like put it as like a little like not a hidden bulletin point, but I think I put it, where is it at? One of the slides, I think said it very like low key. You remit it on your sales tax return. That's funny. I asked a question. I didn't even give you the answer. I was just seeing if you guys are paying attention. All right. So this is the question part, which I didn't get to the other day on my sales tax. And the question probably is, why isn't your demo working? And I was like, I don't know. I don't know what I did wrong. It hates me, apparently. All right. Anyone have any questions? Obviously, if we were setting this up in your system, we would test and get it to work immediately and not mess around with it. Nothing. I was like, I try to leave room for questions instead of diagnosing my errors. Right. Well, in that case, Inovia, we offer other webinars, so definitely check it out. I love live demos. I should always pre-record. But we offer other workshops, we offer blogs, stuff like that. We also have these two crazy kids that I get featured on occasion. But thank you for joining us today. If you have questions, feel free to reach out and I can hopefully help out and do it better. Thanks everyone for joining today.